breaking news recently in the industry from the US Treasury OCC. This is the largest US banking regulator, and they had come forward with new guidance that is allowing US banks to leverage public blockchains and utilize dollar stablecoins as a settlement infrastructure for the US financial system. So that's a mouthful. What the heck does that mean? To break it down, essentially today, one of the biggest problems I can think of within the banking system is the need for there to be these intermediaries, right? You have these banks that are in power currently, and there is no way for us as or any other bank to put checks and balances into place to see what exactly is occurring within those banking networks, right? One of the biggest problems that I can think about is when you are trying to send money to someone on Christmas. Christmas is one of those days that you want to be able to send money to someone, but on those days, I can't wire money. Now, the benefit of utilizing a public blockchain is that when a transaction goes through, it allows for automatic or easier settlement because there are multiple different participants in that network. So I'm not just relying on one bank or the receiving bank to validate my information. Instead, now it's a network of these banking institutions that are going to be different nodes within the network, and they will actually confirm that transaction. So that way, if I wanted to send someone money on a 24/7 basis, I can do so because there's various institutions that are validating that I have the funds, that I am sending those funds, that the person I'm sending to, they're also a good player, etc. Right? So this establishes those banks to treat public chain infrastructure the same way we look at wiring, ACH transfers, etc. Right? And I think even more impressive than this is the idea that stable coins are going to be utilized as an electronic store of value. For many of you guys, during the past year, we all went through a period where we were struggling to receive just simple checks from our government, right? These stimulus checks that we were supposed to receive as a result of the COVID virus outbreak. And it took us about a few weeks just to get $600 recently, right? Now, a good way for us to be able to leverage a stable coin in this situation or a public blockchain infrastructure is that every single person in the United States could have a specific code. And thankfully, in the United States, we do have a specific code that identifies us, and that's our social security number. Now, imagine if the US is able to directly send you a payment utilizing a digital currency because they have access through the public blockchain a hash information that represents your identity. No one else knows who it is, except this public address shows that it's going directly to you. That makes the whole entire process so much more easier, right? When you talk about a decentralized, a permissionless, open source, and internet mediated software that's creating the foundation for United States financial system. That is something that we genuinely need in this country. I think too that this recent news will actually pave the way for the leading digital currencies and USDC, USDT, right? The United States digital currency, United States digital token as a mainstream payment medium for all forms of payment. So not just your settlements, right? This can include actually transacting with retailers because if you guys remember, earlier this year, we had PayPal actually come out and say they're going to be utilizing Bitcoin as a part of their payment systems. Now, imagine if these stable coins begin to be integrated by platforms like Stripe, like platforms like Shopify. All of a sudden, now I don't have to wait for an ACH transfer from my account. I don't need to wait for the bank to take 3 to 5 days to do settlement, all those things like that. Instead, it's digital stable coins, digital currencies that are representative of real dollars, and they're simply being transacted on a public blockchain. So that way, every single time a transaction occurs, it can be settled within minutes because there are multiple different nodes within the network who are validating that transaction. So that is actually what I'm really excited for. In regards to where I see the markets going, I want to kind of bring it back to Bitcoin first. And I want to remind people that in these bull markets, we're always going to see drops, right? There will be 30 to 40% pullbacks. It's not a secret, right? So if you're thinking that, oh, well, if I put money today and then there's a 30% pullback, I'm going to lose money. Yes, you will lose money in the short term, but in the long run, the way that Bitcoin's algorithm works and its current foundation, you're going to look at potentially between 3 to 4x return by the end of next year. Now, I'm not giving my word on that. That's, do your own research. But based off the way that institutions are coming in and buying up Bitcoin and chomping it up like it's nobody's business, that growth is very likely to happen. I mean, to hit 35K by the beginning of 2021, I would have never expected that. So to say that we can hit six figures is not out of the question. But again, so that goes back to 30 to 40% versus potentially 3 to 400% return. I mean, you're netting about 360 to whatever percent in return. So that's kind of how you have to think about Bitcoin in the long run. We're still very, very early in adoption. I don't think we're going to be breaking the adoption pattern within the next 5 years, right? So just take some time to understand what Bitcoin is, right? And then from there, dollar cost average in. I can't stress this enough. DCA is the best way for you to adjust for any sort of risk associated with Bitcoin, right? Bitcoin is a risky asset in itself. So if you are worried about, oh, well, I only have $200 every month to invest, well, that's fine. No one's telling you to put in 1,000, 2,000, 3,000, even 10K today. Well, go ahead and put whatever is reasonable for you, but make sure you're doing a genuine investment every so often because that's going to help you counteract your risk.